Hello there, my friends. Chris Marcus here with you on Wednesday, September 20th, also my birthday. So glad to be here with you. And today we have a quick video about why gold and silver. Certainly, that's been a focus on my channel here in the last couple of years. There's been a divergence. There's certainly the mainstream Wall Street crowd that talks about stocks and bonds and QE and all that good stuff, and how that will save the day. On the other hand, I believe the gold and silver crowd has become a bit more prominent, and at least because I think a lot of people are realizing that something seems off. We keep having these bubbles, the response is just to borrow and print even faster than leading up to the last one. So I think a lot of people are becoming more aware. Maybe I just spend more time thinking about it and studying it. Who knows? But I thought it'd be a good day just to put into simple terms why, since we talk about it so much. In fact, what made me think of this yesterday was when Ray Dalio was, we were mentioning some of the Ray Dalio comments. The head of the world's largest hedge fund, who is now recommending gold. And one of the things that he mentioned was how the traditional safe havens, there's signs for concern. And what are the traditional safe havens? Well, where they're in Wall Street terminology are referred to as the dollar, the treasury, to some degree the Japanese yen, maybe the euro. Although the dollar and the treasury on the top of that list. And what that actually means is that anytime, so maybe there's a default crisis in Asia, or war breaks out, or there's some sort of chaos, could be political or financial, but some sort of chaos that's affecting the market, and this flight to safety or safe haven moniker refers to when that's happening. Hey, we don't want to have our money in risky stocks or risky bonds. What's the safest? The equivalent of what cash in the bank should be. Of course, if our cash, I mean, it's amazing. Even cash in the bank isn't really that safe anymore, because with so much money printing, you leave your cash in the bank and the cash loses its value as the price of things you buy go up. So certainly following the housing crisis, dot-com crisis as well, but we'll stick to the housing crisis, you saw the degree of money printing just went exponential. I mean, we've been sailing along slow, gradual pace, which many people, myself included, always thought was a lot. But whatever we were doing, just imagine you have the graph here and then 2008, boom, which you have a lot of printed money, as we've talked about before, has to go somewhere, has gone primarily into the stock, bond, and real estate markets. And really, when you think about it, any asset, you increase the supply, that lowers the value of it. So to look at the dollar as a safe haven, the dollar is, in a sense, a safe haven because still, well, I don't know if primarily the entire world still has faith in the dollar, but to the degree that there's still, their actions are using it as the main reserve currency and trading vehicle. And so there's that sense to which it's something we've been so accustomed to for so long that most people just can't really imagine life outside the dollar yet. And I think that's very normal. As much as I think about silver and gold, I mean, if the dollar crashes tomorrow, I'm guessing I'm probably not taking a silver coin over to Whole Foods. So it's a tricky situation because, yes, there's what actually happens, what we actually do in our day-to-day life, and then the things that are going on monetarily that will, in my opinion, direct the course of what we'll be doing in the future. And certainly everything I see points to a transition because, think about this, you have the dollar that's being printed like hotcakes. Love saying like hotcakes. And certainly that's the rate they're being printed. You have Now, the other one Ray mentioned, and certainly here in Wall Street terminology, is the U.S. Treasury being a safe haven. Now, let's think about that one for a second. Publicly stated debt up to about 20 trillion. Although to put that in context, which is certainly a big number considering the size of the entire U.S. economy, I think it's still around 15 trillion. So you'd even tax it 100% for a year and still wouldn't be able to pay that off. But remember, there's this video I always found, I don't know if it's amusing, shocking, terrifying, when Obama was running for president, and he was talking about Bush, saying Bush took out a credit card in the name of the Bank of China and doubled it. I think when Bush came into office, publicly stated debt was about 5 trillion, and so he doubled that to 10 trillion. Obama, in one of his speeches, was ragging on him for that. Of course, then Obama came in around 10 trillion, doubled it to 20 trillion. So just the last 16 years alone, we've seen the amount double twice. So it's a lot. We're not talking about small amounts. Add to that, if Congress followed the same accounting rules that they brought Enron or some of these other corporate accounting fraud scandals into, and if Congress had to actually follow the same rules they set for other people, they would be in violation of the accounting code for the way that they do the accounting of, it's often referred to as the unfunded liabilities, which is Social Security and Medicare. So the way the accounting is done is that if you owe liabilities in the future, you can discount them based on the interest rate, meaning, maybe you owe $100 in the future, and if assuming we're living in a world where you actually did get interest, maybe your obligation is 98 because then you have that time until the payment's due. So in either case, if you look at these future liabilities, these promises the government has made, and this is according to government numbers, gets closer to 100 trillion. Which there's simply, that's why sometimes I feel confused where it's like, as a financial analyst, I feel like I should be looking at numbers more often, yet so many of the numbers that we get are unreliable. And then perhaps what makes it a little easier, fortunately, in an unfortunate way, is that the numbers are so insane that, all right, maybe there's a rounding error here or there, but 20 trillion in itself is a staggering amount, let alone 100 trillion. And again, this came, a lot of people who comment on this, although the Congressional Budget Office back in, let's say 2011 or 2012, even the Congressional Budget Office back then had a figure of 85 trillion, which who even knows what it is now. So it's a lot. So again, it's a lot to the degree that it's impossible to be repaid. The debt ceiling comes along. What do? They just lift it. And this is what's being sold on Wall Street as the safe haven. The Japanese yen, Japanese debt, you can imagine some rough approximation of the same thing. So these are supposed to be the safe places that you can put your money, and they're exactly the opposite of that. So this is where gold and silver comes in, because just even if you forget the treasuries for a second, in some way this U.S. model is unsustainable. And if you think about gold or silver, yes, there is supply and demand to gold and silver like any asset. And certainly everything I've ever looked at, especially with the increasing industrial demand for silver, just the supply and demand alone, I would feel comfortable or owning gold and silver. But then there's a few other factors that are what allowed me to be so comfortable investing a large portion of what I have what I have into precious metals. The first is that when I was sitting back on I guess we were on the American Stock Exchange in 2007 or 8 until we moved over to the New York Stock Exchange. And I remember sitting there as the housing market was collapsing. And when I saw that there was a group of investors that had seen all this in advance, weren't caught blindsided, weren't sitting there like the Fed saying this is the perfect storm that no one could have seen. And they wrote basically all the same things that I'm saying now, leading up to the housing bubble and explaining why you have money printing, you have debt, it's going to cause a problem. And what is the hedge against that is gold and silver. Because leave aside any gold and silver supply demand for now and just think of it as a piece of metal. Gold and silver aren't really going up or down in value. It's the dollar that's going up and down in value. Think of it this way. Gold is, let's call it $1,300 an ounce. It's just a fraction, dollars per ounce. So if the number of dollars are increased relative to that same piece of metal, the bar or coin or whatever it is isn't changing, but as the supply is increased, well, if nothing else happens, therefore you would expect, just do that fraction, that price in dollars, gold or silver, would be relatively more valuable. Now, we haven't seen that really happen yet, which has been confusing to a lot of people, although that's why I talk a lot about how we've seen a lot of paper and silver and gold sold into the market to a degree that you hear numbers of over 100 to 1 in the multiple hundreds. I don't know that nobody actually really knows for sure. But again, you start to see there's something off here. And even if you look at that U.S. debt clock, I think when they, because again, nobody really knows how many dollars are out there. There's the numbers the Fed puts out. And of course, if you believe everything the Fed says, then I'd be careful of that because they have a long track record. Again, in case you're not aware, remember the Fed is not owned by the government. The Fed is owned by the banks. Same banks that get caught and fined for manipulating mortgages, for manipulating LIBOR, for manipulating just about energy markets. I mean, it's harder to find one they haven't manipulated. Certainly gold and silver, I put in that category as well. So you add all these things together and yes, I know there's the long track record of gold and silver having a history as money, and I think there's some credence to that. I believe there's also a degree to which, as these things unfold, I don't know what people are going to look to yet. I think there are a lot of people that are becoming more familiar with Bitcoin, and the cryptos will look to that as a currency. Does the whole world understand the history of gold and silver and why it works? Well, I would argue that it's a great store of value and should serve as some sort of money backing. Is that how people are going to act? That part I don't know yet. Just if you look at how basically the main sources of value and transaction that we're using are, and I don't say this lightly, but completely fraudulent. The dollar is completely fraudulent. The treasury market is completely fraudulent. And the foreign currencies and foreign treasury markets are not all that different. So if you want to say it's almost by a process of elimination of what's left, you could look at it like that. Certainly, just even forget the manipulation of the metals that's keeping the price down. Still, you have a lot of reasons to like gold and silver. But now the fact that in order, and I do subscribe to the view that, again, you see enough officials look the other way, you follow this long enough. In my opinion, on some level, it's not rocket science. So someone who's supposed to be regulating and saying, hey, wait, there's a crime going on here, looking the other way. So even without that, the merits of owning gold and silver, to me, are great. And I think I was mentioning before on that debt clock, if you just measure the amount of money they say is printed versus the amount of metal, silver, they have it like $800 an ounce, gold, multiple thousands of dollars higher. Now factor in, if me and many other analysts who write about this, and some well-known analysts too, Eric Sprott, a whole bunch of guys that dig into how silver is manipulated. Yeah, that factor in. And again, I'm not giving legal specific advice, just a trader and economist here, not familiar with your situation yet. I've been saying for years, and still feel confident, that in my study of history of the financial markets, I don't know another situation that's represented as good of an investment profile as gold, and even more so silver at this point, because you have just such a bizarre confluence of events coming together that don't normally happen. This is not normal financial market behavior to have central banks say we're going to take interest rates below zero. But in the end, what are the other alternatives? I mean, all of the currencies come down to someone who has the ability to print them, and we've seen time and time throughout history that that's what they do. So when I add all of that up, gold and silver make a lot of sense to me. Cryptocurrencies, again, as I continue to learn and feel more comfortable with them, make a lot of sense to me. Although I did not have a fun time yesterday trying to access my Coinbase account, this two-step authenticator. So if anyone can help me there, please write in and let me know. Also, if you have any questions, or if any of this didn't quite click yet, let me know. I'd be happy to explain this more. It's not the easiest investing environment. It's not close to what we've grown up being told was the way things work. I understand that, and I can certainly appreciate that. But again, that's why we make these videos. That's why I try to explain these things, what I've seen and experienced, so that hopefully it can be easier for you. So again, leave any questions or comments below. Love to hear what you're thinking, any other questions that come up. With that said, we will see you again tomorrow. Thanks.